What's an accredited investor? I've got the answer coming up. What's up everyone, and welcome to Go for Broke Media's newest series. Very excited to show this to you guys, Crypto Made Easy, where I break down small individual topics that you'll come across in your journey into cryptocurrency investing. These videos will be much shorter than the regular episodes of G4B TV, which delivers totally comprehensive coverage over much larger topics. With this new Crypto Made Easy series, I want to give my viewers more digestible, smaller bits of information that only take a few minutes out of a day, but will prime and prepare you to be more successful in navigating through the growing cryptoverse of the future. So now that you know what to expect, let's dive into it. So a buzzword you'll often hear surrounding certain investments, such as ICOs, is accredited investor. Well, being accredited as an investor is generally a big barrier to entry into more high risk, but historically higher reward investments. In traditional finance, examples that are limited to accredited investors include a long list, such as hedge funds, private equity, venture capital, real estate limited partnerships, privately placed IPOs, such as Spotify's recent stock issuance on the New York Stock Exchange, and many more. I know what you're thinking. Damn, those are some sexy investments. But like everything nice in life, you have to earn the right to participate in these, or be lucky enough to be a trust fund baby. Either way, you have to be knowledgeable about investments or you can be burned quickly. So the legal term accredited investor actually comes from the SEC's Regulation D. Regulation D is designed for smaller companies that wish to raise capital from outside investors, but who don't have the resources or just lack the desire to pay the high regulatory costs associated with a public listing and becoming registered with the SEC. And so naturally, these become higher risk due to their earlier stage and more sophisticated nature that accompanies fewer investor protections and disclosures. And so, to protect smaller mom and pop investors from losing their entire life savings and preventing them from self-inflicted financial ruin, the SEC has set certain thresholds required to be met in order to become accredited and cleared to invest in more sophisticated investments. For individual people, those include a minimum annual income exceeding $200,000 for the last 2 years, with a reasonable expectation that you'll continue to earn or exceed that level of income, or a combined income of $300,000 with a spouse. If you are instead purely enjoying your wealth and not working, you can also become accredited if your net worth exceeds $1 million, either individually as a millionaire bachelor or jointly as a married power couple. If you're going the millionaire route, there is an additional roadblock since the passage of the Dodd-Frank Act in 2010. That $1 million net worth excludes the value of your primary residence, aka your home, of which its value may have simply skyrocketed in appreciation and therefore crowning you as a paper millionaire. But if you are amongst the wealthy elites who have valuable assets aside from your home, the process to become accredited is actually much easier than most would expect, since there's actually no government agency that reviews and hands out these shiny credentials. Instead, whatever issuing body that is selling their investment to you will conduct their own due diligence about your qualifications before accepting your investment. Interestingly, there is a third route, including very limited exclusions, for individuals to become accredited. For example, such as if you're an executive or director of the investment issuing entity. Now, the status of being an accredited investor also extends out to more than just people. For example, entities such as banks, insurance companies, brokers, and trusts. But I'm guessing you care less about those more esoteric definitions, so I'll just leave you a link in my description if you do care to learn more about that like I do. And that's it. I hope this shorter video was insightful and helped build your business acumen as you dive deeper into the murky waters of cryptocurrency investing. If you're a new viewer who's interested in cryptocurrency investments and related content, don't forget to subscribe to the G4B TV channel. And if you're already a subscriber, let me know if you enjoyed the first installment of this new series, Crypto Made Easy. With that, I hope to hear from you in the comment section below, and we'll see you next time.